Lendai investing app. The pros, the cons. Lendai is a platform that merges lending and investing, but how does it stack up for investors? Starting with the pros. First, alternative investment options. Lendai focuses on lending-based opportunities, offering exposure to non-traditional assets. Second, passive income potential. By participating in lending pools, users can earn regular interest payments. Third, portfolio diversification. Lendai allows investors to spread risk across loans and borrowers rather than traditional stocks or bonds. Now, the cons. One limitation is credit risk. Borrower defaults can impact returns, making risk assessment critical. Another drawback is liquidity. Some investments may be locked in for a fixed term, reducing flexibility. The surprising truth? Many investors overlook fixed income alternatives. Lendai can offer steady returns, especially in volatile stock markets, if managed wisely. In conclusion, the pros: alternative investments, passive income, and diversification make Lendai suitable for cautious, income-focused investors. The cons: credit risk and liquidity limits highlight the need for careful research and risk management.